The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman on this 22nd day of August. My pleasure to be here, and thank you to our great hopes. And let's try to keep that high standard up here. Dow's up 155 at 21,858. S&P's up 20 at 2448. Comp index is up 76 at 6,289. The VIX has plummeted back under 12 in the 11.60s. 11.60s, 60s. And what we've got is the E-mini is up 19. Now, let me just use this for a moment to show you what we're really looking at, because the E-mini gave just fabulous readings in different technical frameworks. So what we were looking at is the pattern that I look at, you remember, is that Chapman wave stork leg formation. You got the leg, you got the body, you got the neck and the head. The head becomes the stork's beak, which comes right down. If it smashes through the body and goes below the body, that's really a major sell. And what it says is that at some point quite soon, you're going to get a major rally, and then you're on your own. It's exactly what happened. And what happened is also we went from 2488 down to 2430 in one swoop. And then in what I call a Chapman wave parallel one-to-one extension from the 2474 round number peak A bounce that we got, that was from the peak low, there was another cascade to the downside. And it must have been almost to the tick. It went to 2419. Let me see if I can do that. 20, that's 54 points there. And my goodness, 57 points there. So it was almost to the dollar, and down to the one-to-one extension. That's those light purple or mauve, whatever it is, downtrend lines. And then what I said is I had a Chapman wave trend gauge flashing, which said that there should be a sharp move between 9 and 11 points to the upside coming in within 2 days. And look what happened from yesterday's low of 2419.50. We had a very nice rally off the low, but it never made a leg A. And I needed today to see anything above 2431.50. Well, where we are, way above at 2447, right just above the 9-period exponential moving average. The MACD is still very negative, and the stochastics just trying to turn around here. On balance volumes turned up, but I'm looking at this and I'm saying I don't believe that this is the turn to the upside. It's a turn to the upside. Reason being that the weekly chart has made, I'm pretty sure this is going to turn out to be a peak F and a Chapman wave 5, which suggests that there should be a little bit more time, maybe not that much more in price, but at least that a little bit more in time to consolidate. The MACD is still very weak and the stochastic is very weak. So I'm suggesting this is just a counter trend bounce in this kind of phase. The up moves and down moves, we're starting to show much greater depth of movement than we had before. And this is suggesting we're getting into the volatility stage, which suggests we've still got time. And maybe price, we don't know yet, but we've got time before we finish the consolidation. Now I can go to the QQQ series, which is showing you the very strong move at 143.10, up 2.06, made a leg C now. It's a trough C at 140.65. What we were looking at is the downtrend support, this dashed line, went under it, closed above it yesterday. That was a good sign. MACD and stochastic in the weekly chart are still very, very weak. But, ironically enough, the price is still holding above the 9-period exponential moving average. The weekly, the 120-minute chart is in a leg A right now. These A's, they either fail very quickly after the very strong spike to the upside, or they establish a higher level of consolidation. In this case, it'll be above 142.50. And if that's the case, there could be a B and maybe even a C. So we'll look at this closer. I just want to go back to the E-mini to show you that where did it go? Oh, ESU17, there it is, has gone to leg D. What do we look for in the Chapman wave methodology? We're always looking for these leg Ds. Why? Because in a leg D, other things can happen when it concludes. Let me just show you what we're talking about for those of you who are new to my work. In the Chapman wave, in the simplest form, we try to identify the lowest low bar and merely count each successively higher peak. When you get to the fourth highest peak, peak D, uppercase on the way up, lowercase on the way down. Can go to a G, but D is where other things can happen. It could recycle to the upside. It's very positive if it does that, or that's where it can turn around. And we're looking at the D that was Chapman wave 5 at 2480 on the 27th of July, pull back sideways before having one, what we call in the Chapman wave, a rogue wave to the upside to 2488.50 on the 8th. That formed the head for this particular pattern, and then it started coming down. So let's go to the S&P cash. Just want to show you something here. It's obviously pretty much the same as the E-mini, but I think it's a little clearer. I haven't got as many diagrams on it, and it shows that there was, let me get out of that. It shows the weekly chart is technically very weak. The monthly chart is still holding very well. Some signs to say that there's a little bit of a dip in the on-balance volume, and there's a little dip in the stochastic, but let me tell you, at 95%, that's still very good. So let's go back, and we want to look at the SMHs. SMH, where are you? Right here. Semiconductor ETF trading at 86.23. In a lower lows and lower highs pattern, except the last low was slightly higher at about 84.50, and here we are at 86.24. What we're looking at is the apex coming in this triangle of lower highs and higher lows. That pattern is still forming in the weekly chart, so we're not yet in a full-blown sell mode derivation by having the SMH is closing under 84, which will be decisively under the 9-period exponential moving average, and the monthly chart isn't peak C, but holding very well. Now, I think it's important. We want to go to gold, GC. Gold is down 4 at 1292. You see this consolidation using the 9-period exponential moving average as support. The MACD is starting to turn down, but it hasn't crossed negative. Stochastic is very weak, so is the on-balance volume. Yet 1288, the 9-period exponential moving average, was a springboard for a bounce to the upside. So we're looking at this and say, aha, we finally got that leg D in the weekly chart. Now we can start to chop around, but all of it depends a lot on whether the dollar is even able to have a rally that takes it above the previous peak C high, and that already helped the weekly chart. Hasn't done it yet. It's up 30 cents at 93.43. It needs to not go above 94.14. It needs to go decisively above 94.14 into the 94.50s, and then we can say, aha, the dollar finally has found some legs to the upside and is going to move very high. Now, it's so interesting and fascinating for me and my subscribers. I've been adding longs. I don't know why, but the technicals have been good for these particular stocks. So we added them to the long side. And I'm saying to myself, wait a minute, we've only got a couple of shorts and most of them we're long. Well, that's what the market told us to do. And so far, they're acting very well. So I don't know what to tell you. It's weird, but weird is the name of the game. Basil Chapman does up 160 S&Ps of 20. I'll be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So this is what I want you to look at. I want you to continue with crude oil. So I had a question. The USO is showing incredible amount of 3 inside candles going to break out, a good spread trade today. What do you think? I'm having a tough time with crude oil because of that 200-period moving average at 50.21 that it keeps being repelled from. So I see nothing right now in terms of holding the breakout, because that was a nice candle on the Friday. Yeah, on the 18th at 48.90. And then all of a sudden we get a complete reversal yesterday, a red candle. Today's an inside day. The MACD needs to turn up. It's trying to turn up, but it hasn't yet. Stochastic has turned up on balance, but it's not really producing anything in the price. So if you're looking at the USO, obviously the same sort of thing, C1 peak, C1, C2, but that never did touch the 200-period moving average. I'm going to say, Paul, that you could do this. I would not get carried away. But if you like what you're seeing, and I'm looking at this more as just a sideways consolidation that should continue for a while, I could be wrong. So I'm going to say to you at 977, for just the tiniest of 1.5% risk, you could buy something here. You could start your position. Maybe you have already, but you could start your position. And the moment it takes out the candle of yesterday's high, 991, if it goes to 992, I would add a little bit. Why? Because if it takes out the candle of Friday, the high of 998, it's kind of open, a little bit of resistance here at 1006, but really that ugly candle, that reversal candle at 1024 back on the 10th of August, that would be your target. So that's if the MACD turns around, stochastic keeps rallying. So the risk is you've got yourself 76, 64, 12 cents. Oh, I'd say 13 cents. I don't think that's an unreasonable risk at this particular point. I wouldn't actually, personally, I wouldn't give it 13 cents. I'd give it something like 7 cents because it really has to work. Remember, yesterday we were talking about GE, and that really worked because it almost immediately held its ground. Today it's rallying a little bit. I said it wouldn't be great shakes, but it was a good risk reward. This one is just a little less of a risk reward, and it's a greater risk to reward, in that if you're wrong, it could go down quite sharply. But I'm saying if you are prepared to go for the overnight risk, then that's one thing. I personally wouldn't want to have the overnight risk, and I just hold off. I'd rather be buying strength than weakness right now. Why? Because if this starts to show strength from here, that strength could really help. And I was looking at a particular commodity index, an ETF for my subscribers, but it has the weighting of too much oil, both crude oil and regular oil. So I just decide, you know what? At this particular point, I don't like the weighting, W-E-I-G-H-T-I-N-G. I don't mind weighting, W-A-I-T-I-N-G, but I don't like the actual weight of that much percentage of the commodities not in gold, but actually in crude oil. So that's the way I'd leave that, I'd leave it. But I'm just saying, if you are prepared to, if you like what you see, I'm going to say that getting in right now with even a 13-cent risk can allow you a move that could be more like a 60-cent move to the upside if everything works for you. But it has to work really by tomorrow going into Thursday. There's no messing around. It has to work. Otherwise, just going sideways is a waste of time. So I hope that helps you. Let's go to the next question, which was FCX. FCX had a spectacular move. It's gone to a leg G/C in the daily chart. MACD is just about across positive. Stochastic's good, but not great. Price is actually just above the previous high, that peak F high of 15.27, which makes this an alternate count: A, gray B, and then a G/C. And the reason why I have that is because if the MACD crosses positive, that allows you enough room to go to a D on the upside. Then I think if it's a Chapman wave cup and ladle, this thing's going right through. So if you're a long FCX, I'm saying congratulations. Very nice move. Copper, Freeport McMoran, and copper and gold. I think it's mostly copper. And it's up 51 cents at 15.24. This is very nice action. It had this, I forgot to draw this in. I had it, for some reason I lost the notations and I had to redo it. I did it very quickly, but I did have to do it. That falling axe formation says that a 1-to-1 would take it to about where it is now, where it was at the high of the day, to about 15. So that's 15.46 to about 15.55-ish. So somewhere it's got a little more to go on the upside, and then it might take a bit of a breather. But if it goes right through, that's very positive. If you're long, congratulations. I wouldn't be doing anything. I wouldn't even take anything notified. Just keep it right here, because there's leg C in the weekly, peak C in the monthly, with quite a way to go to the 17.07 level to start leg D. It's doing very nicely. There's just no complaints. I mean, high-grade copper. Look at this, high-grade copper. In a leg, I'm calling this leg F. So in a sense, it's kind of coinciding with what we're looking at in the weekly chart, but it's a different pattern, and it's a leg D in the weekly. So far, everything is go for high-grade copper to hold very steady, but there's a chance that it could have a consolidation, which could even take it down to the low of the wick of 2.87. And it's at 2.98 right now. So yeah, maybe it's close to some kind of consolidation, but this is really nice action, stair-step move, up, sideways, up, sideways, up, sideways, and then up to a leg F. I'm calling it F, probably, you know what? I'm going to do the same as I did with Freeport McMoran. This is F/B. I want to give it the benefit of the doubt. The MACD hasn't crossed positive, but it looks like it's close. It could deflect lower, so that's why tomorrow is very important. Next 2 days, very important. And the stochastic is under 80%, but the on-balance volume is very strong. So I'm just giving it the benefit of the doubt. If I had to ask me, make a decision, I would call it F right now and say, yeah, I could go to G, but then I think it's pulling back. Copper close to some kind of consolidation, but acting very well. Next question I had was junk, JNK. I wonder if I've still got that notated. How do I lose that? I just don't understand. How many times can you retype that? All right. So if this is an A right here, this is junk, JNK, 35, 39. Okay, I remember that now. So this is A, B, C, D, and very quick E, very small patterns. So this is the spider, BB, Barclays high yield bond, and that is acting with right now it's in leg E. very quick, C, D, E, but they are very small. And that says just be a little careful. It's not to say that you're going to get a major sell-off, but it might mean that the upside is a little bit limited right now. Weekly chart has gone to an A. Let me double check. You always got to go back far enough. Just as well I did. So that's A. Yeah. A, B, C, T, and an E right on the 200-period moving average. Yeah, so junk weekly at 36.98. The question, I'm not sure what the question is, but I'm going to give you what I'm looking at. And it's saying that it was repelled from the 200-period moving average of 37.42. It's in a trading band. In the week daily chart, it's come off the 200-period moving average. I think it can go a little higher. I'm looking at it at 36.97. I think it can go to 37.30 to 37. Nah, I'm going to do that over. 37.08 to 37.12. Maybe that's what we're looking at. So maybe I'll be back. Yeah, I'll be back, and we'll talk about it. Okay. I don't want to just do it glibly. And questions about when is the earliest month? Okay, I'll be back in a moment.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
The question is Apple, they got a bunch of them, Apple, Cisco, Microsoft, and the Qs. Chapman wave count. Let me just show you something. The arch formation in Apple is quite apparent with the technicals failing in the daily. The weekly chart could deflect lower, and at 76%, the stochastic is also not very good, but the price is held beautifully. And it's in an E/B, and the monthly chart is in leg C. So this is what I would normally do, and I'm going to do it right now. I'm looking at the daily chart, and I'm about to put in an oval formation in the Chapman wave stalk leg pattern. So it's now in a competition between the arch and the oval. And it's very simple. It looks to me as if Apple very much, that's a leg C. There's no other way I can count a peak C over there. And I'm suspecting that maybe at 159.82, all it needs to do is to go to 162.51. That's 3 points. I could do it. Maybe it gets those 3 points and it goes to a D. And then it starts to pull back. And that D should come in this week. And we're going to be watching it closely. I'll make it real simple. If Apple closes below 153.75 at any point in the next week, I'm going to go all the way into next week, into Tuesday or Wednesday, that would form a pattern that says arch formation in the daily. Technicals are very weak. The monthly chart, the weekly chart will then be testing the 153.93 9-period exponential moving average. And if it closes below that, it says, okay, now you can keep coming down, but you're still just in a consolidation based on the lows that were made just above 100, about 141. And what's even more important is that the monthly chart has held very well in the Chapman wave cup and ladle breakout, which should go to D. And that's really what you want to keep in mind. Okay, so a breakout above says the 162.52 starts a leg D. So just keep this in mind, that Apple is not a short as far as I can tell at this particular point. I wouldn't be shorting. There are plenty of other stocks that are shorts, potential shorts. This is not one of them. And here we're going to go into something else. If I look at Microsoft, MSFT, trading at 73.02 up 87, has made a peak C. Very unusual to go to an all-time high at a peak C. I talk about this all the time. We see that eventually some of these characters, they'll end up doing the D. It might take a while, but they get to the D. But at this particular point, all that I'm looking at is lower lows and lower highs. And Microsoft breaks out if it goes above to a D above 74.42. That's it's at 73.02 right now. And it breaks down. If it closes under 71 is really the number, but I'm going to make it 69.75. A close below 69.70. No, a close below 70.50 says Microsoft weekly chart is going to start coming down deeper. And it's just, I'm trying to make it as simple as possible. Then we had a question here, which I thought was a very good one. Oh, could I look at the HGX? So let me go do this. Again, the bonds are up just to 17 cents on the 30-year, slightly higher on the different the 10-year and the 5-year T-notes. But it's the HGX that we want to look at. And you can see the global iShares Timber and Forestry ETF is holding that up channel very nicely, but it's below that peak D top of 53.52 back in the week of 21st of July. Builders, the Philadelphia Housing Index has gone lower. And it looks to me it's more like a peak G at 287.12. And Toll Brothers came in with earnings today or last night. And what were they? They were not good because it's down $1.25 to 37.01. Peak E in the weekly, peak G, same as the HGX index. Peak G probably, not a peak G/C, it's probably a G with a doji candle in the weekly and a peak E in the monthly. I'm looking at this and I'm saying, okay, home builders, give us the clues, because they've been the go-to area for quite some time. And now they're on their way down in daily and weekly time frames. So we'll see this whether the monthly technicals are very good in the monthly still. So we're going to be watching this closely. 36.97 right now, Toll Brothers. 35.82 is key support. Already more than key support. A close below 35 would say, first time the monthly chart has gone below the 9-period moving average since it broke out back in December of 2016. Okay. Now, real quick, let's look at the monthly charts at a question. Look, the Dow, how soon could you get to a leg F? Well, we're in an E right now. We haven't made a peak E. Let's just say that in August, there is no new high above 22,179. That'll be a peak E. But if it's really so close, it says, hey, all you need is an eye blink and you'll be at a leg F. So you make a peak E and then whoop, all of a sudden you're at F. So it could be 2 months' time. If there is no 2 months' time, yes, 2 months, no, it could be, if there's no E extension in August and September is down, then you can have October as leg F, all right? In the S&P, SPX, the S&P is in leg D. So the earliest you can get to an F is September's down, there's no new high, and it makes peak D. October is up and makes leg E. November's down and makes peak E. And then F is December. So it's the end of the year you could get an F. If you go to the IWM, this is a little different because the IWM made a peak D with the first, it's the first of the indices to really break its 9-period moving average in the monthly, but now, right now it's sitting right on it. So let's just imagine, it's the same thing. So it can't be until December, right? So August is D, October is E, December is F, leg F. It's not even a peak F. So that's the earliest. So far, what we're looking at is, and here's the interesting one, SMH's peak C. So instead of to go to D, E, and F, that takes you into 2018. So I hope that answers your question. And that does not tell you how deep you can go on any correction. It's just saying in the Chapman wave move to the upside, how close is it to actually getting to a peak F in the different indices? I hope that answers your question. So peak F will take you until January, I believe. Yeah. Okay. So that was a very interesting question. Next question I had was the XLF. Sure, XLF is right now trading at 24.74. Nice move to the upside. Where did it go? And I must say that we are actually long the XLF, and the weekly chart is not that great. MACD is a little bit negative. Stochastics is 74% negative. On balance volumes negative. So this is more a trade more than anything else. If it picks up steam, that'll be fantastic. All I can say is that the XLF, the S&P Select Financials, looks a lot better than the KRE, the regionals, the SPDR S&P Regional Bank ETF. That doesn't look very good at all. Yeah, it's going to take a lot of work for it to actually break out from the 51.94 area it's in right now, up 35 cents, to really break out into the 57s. That's a big move. All right, so we've got a break coming up. I'll take more questions by using Chapman Monthly. Yeah, the good questions from Coda in the Den. I'll deal with that. Basil Chapman, Dow's up 145. Yes, did I show the 10-minute chart? Yes, I did. 10-minute chart with G/C pulling back. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. Gee, I've got some wonderful questions. The first question is KRE, Spider SP Regional Bank. Code in the den says, Professor B, if I'm using Chapman Wave methodology, KRE has less downside from here than XLF. Would this not be a good entry for a longer-term position? Let me explain what I'm looking at. You see this lower, in the weekly chart, you see this lowercase h that goes to a lowercase m. Look at the right side chart and you tell me if you see any similarity here. See that chart? You see this move right here? You see that? Lowercase h that goes to a lowercase m, brace to a lower low, and then has a spectacular move above the arch highs. That's the pattern of the lowercase h that goes to lowercase m. When the m is tested on the right side, breaks the previous low, but the technicals have been very strong. So now the same, all I'm doing is looking at patterns. The fact that we're looking at 2 completely different instruments has nothing to do with it, because patterns are patterns. They are fractals of human nature, and that they get repeated. So here you've got the same thing, 59.68, the week of the 3rd of March of 2017, comes down to the 51 area, and it breaks the left side low of 51.17 from March the 31st. That it gets broken on it was June, the week of June the 2nd, goes to 51.08, and now we've gone to 51.11. I'm thinking there could be just one little nick to the downside, and that will be the test to see if that pattern. But now look at the technicals. The technicals here are very weak. Whereas before we were looking at the EUR-USD, the euro-dollar currency pair, the technicals have been strengthening for weeks, months. So that's the difference. So I need to see how it's tested before I want to be long. As a chart formation, right now, keep your eye on the left 2, the daily and the weekly. And now look at the difference. The XLF is way higher in the weekly chart. It's made the U, it's made a cup formation, it's gone to a leg. Maybe it's an E, it's pulled back. The daily chart is arched over. It was in a 24 in the 2440s. It was in an area of support, and now it's having a nice follow-through rally. Excuse me. I'm treating this as a bounce. MACD is still negative. Stochastic's trying to turn up. Let's see what happens. That's all I can say. I think the XLF, to me, at this point, still looks a little better, even longer term than the KRE. That was the question. Now, another very good question, and the question is, Kevin wants to know, Basil, in a situation where 120 minutes started a new and very strong leg B, let's do that. Let's go right here. So this is the 120-minute chart. There it is. It's actually a leg A. It looked like it was a B, but it's not, because that high of 21,700.62 had a high of 21,701.40, just slightly higher, so it extended leg A. So this is gray A. Let me make it gray. And the question's great. Let me just do this again. In a situation where the 120 minutes started a new and very strong leg B with great technicals, but running into the daily 9 EMA resistance line, and has poor technicals, the daily has poor technicals, who typically wins and why? Does the 120-minute chart typically complete in leg D, E, F, or longer-term chart type win? Thanks, Kevin. So, Kevin, this is the question. Within the context of market moves, you can see on the right side, this is the same chart, except this one has the Dow 120-minute chart with a MACD. Look at that. It's gone to a positive in the histogram. That's the vertical lines at 6.5. And it crossed over with the wide beta, the wide distance between the 9-period differential green and the red slow-moving average. The stochastic has had an it's had a rising highs formation. It's only at 32%, but it is good. So I'm looking at this, and we went peak A, B, and C minus, which I was expecting because I was also looking for a Chapman wave 5. Now, am I wrong in saying this is a Chapman wave 4 when it's way above 2? In Elliott wave, you cannot get that at all. In Chapman wave, you can get that. Look, you had it there. 1, 2, 3 was higher. It should have been lower, but it was. No, we were on the way up. No, never mind. That one worked exactly right. There's another instance, but it doesn't matter right now. So in the Chapman wave, you can go higher. It's the number of waves that we're looking at. And in this particular instance, if there is follow-through strength tomorrow, even if it's only 80 points up rather than a triple digit, I'm going to have to say I'm very impressed, and that probably this is going to turn out to be an X, and this is 1, 2, 3, 4, 5 could be to the upside. So the answer, Kevin, is because the daily is the larger tide, and the daily MACD is still very weak, and the stochastic has crossed positive, but it's at 17%. On balance volume is kind of good, but not as good as it was before. I'm saying the weight of evidence suggests that we're going to get, you remember I drew this, from my daily call, my opening call, I drew this pattern with the lightning bolts to the downside, saying that there's a chance that we'll have an arch formation. And then I said, there should be a rally going up, and then we should come down. I don't see anything technically or news-wise to suddenly have us turn down tomorrow with tremendous force to take out yesterday's low of 21,600. But I do see the chance that we're going to start making slightly smaller candles so that there's a potential for another arch formation. And then what I normally do is I just grab my 2 top bars. I take the top of the candles from the moment I'm looking at it, and I'm saying, you know what? I don't need the top of the candles. It's just way too far. I'm going to use the top of the one and the candle of the body of the candle for the other, just so that I'm not being. I don't like to have moving averages and things that are just way out of line. I want to be as conservative as possible, and that says 21,929 would be an outside chance by Thursday. But if it goes there, I have to consider that is really good action, and that we're going to be using time more than price in this consolidation. If there is a move above today's high of 21,864 by tomorrow, and we close at the highs tomorrow, that's where I'm going to say, you know what, fabulous move. We already stopped out for a little bit of a profit in one of our short positions, and we'll just, at this point, I still want to keep one of our core positions in one of the indexes. I just feel that's what I want to do. So this is I think this is a very important moment. So the answer to your question, to be very clear, is that the way I'm looking at it, this, even though it's a beautiful green candle, look at that. It looks a beautiful green candle there and a beautiful green candle there. But it's gone to the gap. That gap, you remember we were looking at those gaps? This is the gap from the 70 from the 31st of July. Sorry, that was the 28th? No, that was the 31st of July. And we've just gone back to the top of that gap. So I'm looking at this and saying, this is where you'd expect resistance. And if I'm wrong, we'll just have to deal with it. But that's the way I'm looking at it. And the irony of the whole thing is that on a percentage basis, the Dow is up 0.68. We've got 3 positions that are up more than 0.74. I mean, I don't even know what to say. We'll deal with it. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, folks, don't forget all the great programming coming up. You've got Steve Rhodes, terrific work that Steve does, terrific work Dave does, and, of course, the one and only Tom O'Brien. What is this, 800 editions of the Gold Report? Fantastic. All right, so let's go 148 up in the Dow, but look at the VIX. The VIX is down at 11.90, minus 129. Sitting on the 200-period moving average. So GT says a couple of good things here. He says, heading to longer insane. You said peak D in the S&P. I can't really argue, but I like to do things on a purely technical basis. And the technical said, at least for now, those are positions that looked really good. In fact, I had one that I'd written up and everything, but I do so much work overnight and early in the morning that I just completely forgot it was sitting right there. CRL is a stock which I had a choice of two. One was CRL, one was another one, and I'm not sure I actually would have got it. I would have wanted it close to the close yesterday. I'm not sure I would have got it. Look at that, up $1.95, up $1.97 and 103. This is Charles River. Didn't get that. I just completely forgot about it. I probably would have missed it, but I'm not sure, because this morning what we did is I went for one that was above the close yesterday, and it's also doing not as well as this, but it's doing very nicely to the upside. So yeah, I don't know what to say. That the long positions, they just said we want to be bought, and I went for that. So I don't really know how to explain it. And let me just go back to the VIX to say that when we've seen the VIX decline so sharply and so quickly, it can stay down for a little while, and that's the reason why I said let's get to the long positions and let's have the buy stops or whatever we have for the short positions, couple of short positions. Let's just deal with it. We're out of one of them. We're still in two. And all I can say is that's what, and both of them are okay, doing okay. So I don't know what to tell you, but you make an absolutely great point. When the tide changes, you don't want to go against the tide. Except that in this particular case, the reason I was looking at a Ferrari is it was making all-time highs, and that's a good sign right now. Race is the symbol. I'll be back with Tom O'Brien later today. Have a great day. Otherwise, I'll see you tomorrow. Stay tuned for Steve Rhodes.
Hi, folks. The 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get